right, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. Hope everybody's having a great trading session. Happy Tuesday to you all. And thanks for spending your morning with me, or afternoon, or wherever the heck you're at. I know, like, those of you in Asia, like Niddish, it's, thanks for spending your, evening? Anyway, glad you're all here. All right, so let's get into the, let's go take a look at the euro dollar, see what we got going on here. Evening, Niddish says evening. It's evening. Thanks for spending your evening with me. All right, so here's the euro. Yesterday we wrote down, resistance of being, 106.60. Well, we came pretty damn close. I mean, we went as high as what, 106.50. So 106.51 right here. Came up there a couple of different times, and you can see it's a 38% retracement, which I don't I don't think we really have to write anything different. I don't think things are much different than what we're seeing at the moment. The only thing that I'm thinking, though, I'm gonna draw this out for you here. So first of all, resistance is 1.0660, right? That's resistance, because you have to realize that if we do hit new highs, a lot of people are going to get excited. They're going to go, hey, look, we're breaking yesterday's highs, right? But what they're not looking at is they're not looking at that 38% fib that sits right above it. So there's, don't get super excited if we rally and we break the highs, unless you know that we're breaking above that 60 level, because then you're taking out that 38% retracement, right? Okay. Now, what I'm thinking here, which is possible, it'd be kind of crazy, but why not? Okay. Perhaps we try setting up an inverted head and shoulder pattern here. Well, I'm not a big fan of head and shoulder patterns, but if we stall somewhere down here on this dip, maybe it's possible. Maybe, here, I'll draw it out for you. Maybe this is possible. Maybe we see something that looks like this, obviously I'm trying to freehand that, but it's possible. Now, I'm not saying that that's what we're going to get, but, just think about like what a consolidation might look like here. So what I'm going to do is I'm going to take this low to this high, because knowing we're in a consolidation mode, knowing that let me throw it out at you again. Keeping in mind that the dollar Canadian is sitting at 131 or just above 131. What happens if the dollar Canadian starts tripping stops below 131? That, in my opinion, will start triggering some selling in the dollar. So that's and right now I think the dollar Canadian is going to actually break through 131. I think it's going to do it ahead of the FOMC. Even if it's just a trip stops, we might trade down to 130.50 just to freak some people out, get all those people stopped out. Okay, so if that happens, then, let's say the euro is drifting lower here, and all of a sudden the euro starts tripping through 131, the euro might go boop, boop, pop right back up again. Now, if that's the case, then we have a situation where we may only pull back to maybe this 50%. So I'm going to write down 105.90 as support, and then 105.25, right? 1.0525, and then 1.0590. You may think I'm crazy. We're in a bearish trend, obviously, but you may think I'm crazy. But like I said, if that Canadian trip stops, we're going to do this. We're going to go boop, and then we're going to pop right back up again. Now, I don't know if we're going to break this ahead of tomorrow. I seriously doubt it, but positioning ahead of FOMC can be strange. It can be. So you can get some volatility. You can get people to just, they raise their hands in the air and they say, screw it, get me out. I'm long the dollar, screw it, just get me out, just sell it, right? The euro spikes up. I don't want to be in this dollar longs ahead of tomorrow anyway. buy the rumor, sell the news, maybe. Yeah, just screw it. Just get me out. That that behavior can happen ahead of ahead of the FOMC. It's possible. I don't think we can rule it out. All right. Okay, let's go look at the cable. Now, Paul makes a great point. Pound has a lot to benefit from here. I mean, we're not going to get the majority of the Brexit news, going into like next year, so we might be safe for a continued rally here. Now, I'm not a fan of the cable. I don't know what to do with it, honestly. I mean, I look at it, I told you guys, I look at it, I'm a little perplexed. I do know that if we break this 128.50 or 128.70, which is the 618 here, we are going to move higher. And we'll probably move higher fairly quickly too. All right. So I think that's a risk. Now, obviously, the resistance that we have to pay very close attention to at the moment is going to be right here at 127.70. Okay. That's, near-term resistance. We have 127% extension right there. Let's see if that matches up with like an 88% retracement, which it does. Okay. So our first stop, which is going to be a problem, which will be 127.50. 127.50 and then 127.80, right? We're range bound, but that was some strong UK inflation data. I think if anybody's short the cable right now, they're probably like, probably a little concerned here about being on the short side. So right now, as long as 126.60 is holding, cable looks like it could rally. 126.60, okay? Because the overnight low was 126.60, so we're just going to write that down as support. All right, let's go take a look at the Swissy. So the Swissy, we wrote this down yesterday. We were talking about, Paul had it had it up on his screen. You saw it pretty clearly there. We had a head and shoulder pattern, kind of a little bearish wedge. We're looking for a sell-off to the 50% retracement. Well, we're almost here, right? We're almost here. I mean, the support comes in at 101.15. Okay, now, yesterday I drew that we could get a bounce there, but I think you have to keep an eye on the euro, because if the euro continues to drag higher, maybe we can go even further. Okay, so let's delete this, delete that, let's delete that, let's delete that, and let's actually draw out what the extension looks like from the head and shoulder pattern. Okay. So this says we can come down to 101. So could we come down to 100.93, which is the 618? I think so. So I think we should probably write down that number, 1.0090 as support. Okay. Now, resistance. Resistance isn't pretty. That trend line, spike there, spike there, spike there. And so 101.50, right? It's not pretty. Just make sure you all understand that. It's not a very pretty picture with the Swissy at the moment. No, I say pretty picture, it's just technically it's kind of messy. 101.50 is, be resistance, not great resistance, but 101.50, okay? And this is a, right now, well, it is bullish. I mean, I think while we're above parity, you got to still stay bullish. It just looks kind of bearish at the moment. At the moment, it looks like we can pull back towards, these lows without much of an issue, right? All right. Dollar yen. So the dollar yen is coming off its intraday highs. Now, the dollar yen had a really good reversal candle yesterday. I mean, this is a big shooting star. Has recovered a little bit here today, but overall, it looks like we're gonna, I think you want to sell into this strength because it was a really, it was a good shooting star yesterday. So, this rally in Asia or in Europe probably is a good opportunity to sell into. Now, I think what we have done, and you look at what we drew yesterday. Yesterday, we're like, okay, well, if we come down, we're going to bounce. We did. We came down a little further than I thought, bounced, right? So this all happened the way we imagine it happening. Okay. Now, let's get rid of this. Let's get rid of that. It's a 50% retracement, so a 618 would take us to 115.57. So 115.60, I think will be a pretty key resistance. If you have an opportunity to sell it up there, probably not a bad idea. With support right now at 114.70. Let me check one thing really quick. This is the breakout point. This is the whole reason why it stopped. Wasn't a fib. It's just a breakout point, right? Breakout point, breakout point, breakout point, retest, breakout point, retest. So 114.70 is pretty key. If we break this, it's pretty key. If we break that, then we're going to come down. It's going to come under some pressure. Golly. Okay. There we go. Let's stretch. All right. Dollar Canadian. So I know we've talked a lot about this dollar Canadian this morning. All right. And the dollar Canadian is trading heavy. And like I said, if you bought the dollar Canadian anytime over the last week, you've had no way. There's no way to get out. You have had no bounce. And if you're looking to short, you haven't been able to enter because it's just been grinding lower. So there's like no exits, none. Okay. And that's why I think it's so risky where we're currently at for bulls because I'm no rocket scientist here. I'm looking at this trend line, and all I'm thinking is, how dangerous is this? Here, and I'm gonna tweet this chart here in a moment. Okay. US dollar Canadian is closing in on some key support. There has been absolutely no exits for longs and no entries for shorts. Last 2 weeks. That's important to note, because when you're talking positioning, you're going into the end of the FOMC. People are like, how in the hell do I get out of this thing? Okay, that thing's it could trip stops pretty easy when you get into a situation like that, and that's why we have to watch it so carefully. I'm going to, I'll probably write down 131 or somewhere close to that. Let's see if we can. Okay, so the 618 of this last move comes in at 130.80, and that's going to be support. I think that's what we have to really look at, because maybe it's not 131, 130.80, and that's a 618. So if you see it right here, okay, that if we break that, we're going to trip stops. There's no doubt about it. We could do it ahead of the of the FOMC. I don't doubt that for a moment. Okay. Now that doesn't mean we will sustain. We may break through this 130.80, spike all the way down. We also, if I didn't even see where the 200 DMA is. FX macro just studies moving averages. I got rid of mine 2 days ago, so oops, not 2000 period moving average. Let's go over to this. Let's go ahead and write that out. Okay. Oh God, yeah. Look at that 200 DMA. Oh my God. Right there. Wow. Okay. So yeah, I mean that's the 200-day moving average. You think about, like, stops. What stops are residing below there? I think it's a potential of just a, and like I said, it may not go very far. It may just push it. We trip stops to 130 and then bounce back ahead of the FOMC. You know what I mean? It's that type of activity we could see. I think it's a risk. We're obviously oversold. We can become more oversolder. Right now, resistance is quite simple. It's just the highs from Sunday, Monday, should be 131, basically 131.50. 131.59, so 131.60. There's been nowhere to get out. think we need to be in a range, and we're quite possibly going to go bearish if we drop below here. You know, remember when we dropped below 133, that pretty much did in the bullish trend, and it's been grinding ever since. Okay. Kiwi. So Kiwi, man, we are really threatening to break above this resistance and clear up to, see, this is, again, this is all about positioning. Do you think the Kiwi can climb through here? People are all short the Kiwi. You know, they're going to get squeezed. They might even get squeezed ahead of the FOMC. So I could see us going into 72.40 without any issue, really. Okay. And, you know, we're bearish, but just because we're bearish doesn't mean it's going to go down. It's just, it's in a bearish trend, but man, we've been, you know, I know I've kept us bearish while we're below this broken trend line here, but, you know, it's risking going back to neutral. I mean, I should probably just put it back in a range, you know, because we're holding up pretty well. Actually, I think I'll do that. Dips are shallow. This support's holding. So that's going to take us down to the 71.50. As long as we're above 71.50, I mean, not going to feel much downside pressure there. All right. Okay, when I come back, I'll do the Aussie, dollar index, Mexican peso, Swedish krona, Norwegian krona. Don't go anywhere. I'll see you back here in a few minutes. Thanks. Hi traders, this is Blake Morrow. You were listening to the Morning Edge webinar. I hope everybody's having a great trading session, and happy joy. All right, so we're going into, where are we at? Okay, we got to do the Aussie. Let's go ahead and get that Aussie going. So here's the Aussie, and you know, I think it's just, it looks like, and I know yesterday we probed it, but it looks like just a matter of time before we break above here. Okay. So we have to be on the lookout for a move above 75.10. We have the 200-day moving average. Oh, no, that's a 4-hour, but the 75.10 yesterday, what we do? 75.13. Let's just write down 75.15. Okay, if that breaks, then, you know, we're going to make that move to 76 cents, which I think ultimately we're going to. You guys know that's how I feel. That's what I think is going to happen, is we're going to make our way up there. I don't know if it's going to happen ahead of the FOMC, but I'll tell you what, it's not backing off, you know. 618 comes in at 74.61. So any dip to 74.60 is probably going to be very well supported today. 74.60. And I know I've had us on bearish for so long, but just it hasn't seen any downside follow through, right? I mean, I think while it sits below 76, we just got to keep it bearish. But I still think it's going to rally into that resistance, personally. Okay. All right. Let's go over to the dollar index. Here's the dollar index. This is kind of the remember we were talking about the euro about possible inverted head and shoulder pattern. I mean, the dollar index could be setting up the same thing. You know, it could be setting up, a complex, head and shoulder pattern as well. Um, the 38% retracement to 101.20, 50% retracement, there's a spike high, and there's actually a spike low down here. That comes in at 101.31. That, to me, seems like a more likely place for the dollar index to go. So 101.30. It's still bullish, but it, looks like we're, in a range at the moment. Support 100.60, which is obviously that big, big breakout point there. It's a massive breakout point. It's been a big level of contention the whole time. So 100.60. Okay. Ooh, but let's go ahead and take a look at the peso. So here's the peso. Now, this peso is putting in a nice little reversal on the 4-hour chart, but notice how we came down right down to support yesterday. How important right now is 2012? It is major. 2012. I mean, we just spiked down there and we reversed yesterday pretty damn hard. We went bang, right off of there. So now, let's get rid of that. $20.30 should probably end up being resistance for today. We're bullish while we're above 20, but man, I tell you, we give up 20 and it's going to roll over. Let's go over to the Norwegian krona. At 50, this trend line is holding like it's nobody's business, even with crude oil, above $52. Now, what that also means is if we drop below, now it's 841 because this is a descending trend line. Okay, I know we wrote down 842, but now it's a descending trend line, so we can drop all the way down to this low right here is 841. That's going to be some major support. If that breaks, then U.S. dollar Norwegian krona is going to go a lot lower. But I don't know if that's necessarily going to be the case ahead of the FOMC. It's like resistance is right here at 846, and doesn't look like there's a whole lot to do with the Norwegian krona at the moment. Swedish krona. Wow, talk about a tight consolidation here. Okay, let's delete everything here. Delete that, delete that. I really think there's nothing to do here. I mean, while we're between 9 and 9:30, I mean, there's nothing to do. I mean, look how we are like really just mid-range right now. We are just like, oops, just mid-range between 9 and 9:30. There is nothing to do here. And look at how tight the wedge is. Like this is giving you nothing. Okay, let's see. So, support 8.99, 9.30, and I'm going to put us in a range, but you know we're in a very, very long-term bullish trend. So, you know, while we remain above, we've managed, you know, as long as we remain above here. I mean, I hate writing range, but all we're doing is we're just consolidating these recent gains. It really is just quite bullish. Sorry, I got to flip back over. Okay, your bias chart is done. You can go ahead and take a picture. We're finished. We're finished. We're finished on it. I don't know what to really do.